Hey folks, and welcome to the Pipnotic Symposium for the 24th of March 2020. Today is the Balinese holiday, Oga Oga. You should try and have a look on Google, it's quite beautiful. And tomorrow it is Nyepi. And Nyepi is my favorite time of year in Bali because it is the day of silence. You're not allowed to use electricity, you're not allowed to use fire, you're not allowed to leave your home, you're not allowed to use telephones, internet, absolutely nothing. And it's an absolutely magical time because the whole of Bali shuts down and everyone agrees to do it. And the Balinese, they're very loyal people to the Balinese Hinduism, and so they literally stay at home, and it's a really beautiful place. And they have kind of the Balinese police called the Pechelang, and they enforce Nyepi, as in they enforce people to stay at home. And it's quite beautiful. The only people that they have to tell to go home are normally the foreigners, because they're on holiday here and they're kind of like, what the hell, where'd everybody go? And so they go wandering around looking and wondering why there are no restaurants or cafes open. And this is of course when the Pechelang kindly tell them to go back to their hotels or whatever. But it's a beautiful, beautiful time. It's a very, very beautiful time. Lots of ceremonies and lots of gatherings towards the end of the day and today in preparation for Nyepi. So it's a very special time, and it has nothing to do with this coronavirus. It happens every year and it's gorgeous. Okay, yeah, things are a bit hectic as well I think in all parts of the world. Countries are closing down. We have kids at home now, and so things are pretty slow. Not a lot of work getting done, but luckily I'm finding time to sit and keep an eye on the algo trading project, which is really, really exciting. So I just want to go over kind of what it's doing a little bit today, and we're going to keep this rather short. And yeah, and hopefully it'll be inspiring in some way to you. So, I mean, the algorithm has been running now for about 2 weeks, and it's done close to 60% returns in that 2 weeks. So it's a really aggressive robot. And I had a look at the risk that was the risk of some of the trades, and it was a little bit more than I was aware of. It was actually risking 4% per trade. So many times more than I normally would. So I think you can take those returns and you can reduce them to about 1/4, and that would normally be where I would be looking to trade. So still a pretty handsome period of returns, 15% for about a 2-week period. Tremendous returns, I think, by any measure. And so I put this on a small live account, and it's running and it's doing really nicely. The small live account is running and it's doing pretty good. I just want to show you a couple of the trades so that you can see what it's doing. I'm not going to go into detail about what it's doing, but I'm just going to show some of these. If we have a look at this one here, this is Australian dollar Swiss franc. So Australian dollar Swiss franc, it was bought down here. Sorry, let me put that in a different window. This one here. Here. So it bought it here. And the only reason it bought it there and not here is because my computer was turned off. And so we still had nice readings here. And I opened my computer in the morning yesterday and I turned it on and then opened the trade. Otherwise it would have gotten in here because the setting is set to open trades at -18. Let's find out what that is, which means nothing to you guys, but to the robot it means this is a very nice area to buy. So it actually would have bought somewhere around here, but it didn't. But nonetheless, it still managed to pull out a tremendous slice of the market, which was magnificent. So what it's doing is looking for extreme deviations in currency strength in the histogram, and it is essentially buying, because historically almost every time, even during recessions, price comes back. So you have these incredibly deep pushes or deviations from the mean, and it can't continue unless we have some kind of a flash crash. And of course it could happen, but it still can't continue forever, generally speaking. And if it does, this is when stops come into play. So this is trading with stops. It's risking 1% for the potential of 1%, so 1-to-1. And it's buying at extreme deviations in currency strength. So here you can see the Australian dollar was very weak. The Swiss franc was strong, so it's looking for the difference between these two, and it's buying here. Okay, so it did a really lovely trade there. Let's have a look at another one. This is the Aussie yen. So what this looked like. Sorry, wrong window once again. Let's move to the middle one so we can see it on the 4-hour. See, it bought here, and it would have bought down here again, but my computer was switched off, and so it managed to get it here instead. Okay, so another really nice one. We had a tremendous run. We got almost 300 pips out of that trade there. So that was remarkable. Let's have a look at this one here. What's this? This is the Australian. We just looked at this one. So this is the euro, Australian dollar. Okay, sorry. Gotta go like that so you get the same currency pairs. Good. And so it did the same thing here. And it sold up here. So if we go to plus 18, let's have a look, 18. So just around here, and you can notice here that this candle closed here. So while it was open, it was moving higher. This just poked up to the 18, so it would have got filled here. My computer is off, and so now it managed to do it just here. So it got in at this this level here, and now price is wriggling low. And you can see here that we had the really weak Australian dollar. We saw this here. We had the euro kind of staying flat, and so the real reason that this currency pair was moving higher was because the Australian dollar was getting weaker, not because the euro was getting stronger. Okay, the Australian got really weak relative to the euro. We got in here and we pulled out 401 pips on that move. So that was a remarkable move as well. Okay, let's have a look at another one here. Here we have the Aussie dollar. The Aussie dollar, American dollar. And the same thing here. Wait, let's see where we got on. We have a few levels overlapping. Let me see where we got in. Here we got in the kind of pretty much the same place. You can see they're all kind of Aussie dollar areas. You can see that if you go to the 18, 18 here, it would have got in here. It didn't, but we got in here instead. Okay, so it had a really nice run as well. So on this one we've got just under 200 pips. So that's a beautiful trade. And here we have the Kiwi, pretty similar to the Australian dollar. And here we got in here and we got out here. We had a run of about the same, about 170 pips. Here we had the pound, American dollar. I closed this out for about nothing. We got, what do we get? We got like 10 pips or something. So nothing very major, and but the trade would have worked out just lovely. If we go to the minus, we have minus 13. We got in here. And so, I mean, price is just having a nice wriggle north from here. And so it's a pretty interesting project. And I had a robot similar to this running a long time ago. I think we're going back 5 or 6 years. And it was looking to trade in line with the currency strength readings. So it's looking for alignment on a handful of different time frames. And when it saw this alignment, then it would simply get in at market and follow these trades. And it had big stops and big targets, and it was trading on the daily, looking at the weekly information daily in the 4-hour. And over the course of about a year, it did 30%. So it did 30% over about a year and a half, and there was zero interference. And this robot here is trading slightly different because it's looking at extreme deviations, so extreme weakness and extreme strength. When it sees extreme strength, it's selling into that extreme strength in anticipation that it's going to start to go down. It's buying into weakness in anticipation that it's going to build up in strength. And of course, this requires courage, to say the least. But it's good as long as your risk parameters are in order, and I think everything should work out just fine. But it's a very, very powerful tool, and I've watched this do this hundreds and hundreds of times before while testing the robot before I put it on this small live account. So it's pretty exciting. And this over here, this is just telling what's going on for the currency strength. It looks pretty messy, but for me, it makes perfect sense. This is telling what's going on with the pound, Swiss franc, Singapore dollar, the Kiwi, the euro, Canadian dollar, American dollar, Japanese yen, and Australian dollar since the open of the currently active session, which is the US session. Okay, so this is what's going on. And if we have a look here, this is what's going on since. Okay, so this is looking at currency strength over the course of the past 50 minutes, so roughly 1 hour. This is the past 54-hour periods, and here we have what the currencies have been doing relative to one another since the open of the week. Okay, and this is very interesting because you can see like what currencies there are demand for this week. You can also do the same thing where you can show, for example, I want to see what currencies have been bought since the beginning of the month. And it's going to show me this. We go out a little bit, we go like that. You can see here, let's go slightly smaller, less information. You can see here that the Australian dollar has been sold off since the beginning of the month. And it gives you really good understanding of where the major flows are going. So we have major flows moved out of the Australian dollar until, what is this? This is the 19th. So since Thursday of last week, and since Thursday of last week, we've actually seen an increase in demand for the Australian dollar. You can see it starting to move higher. There was a big sell-off in the Australian dollar because of all the stuff, the coronavirus affecting the Australian economy, and that kind of faded a little bit. Now we're seeing an increase in demand for the Australian dollar. We see Singaporean dollars pretty flat. We have the Japanese yen, the Swiss franc, the euro, and the American dollar, who are the winners for the time being, and we have the pound, the Aussie, and the Kiwi that are being sold off. Okay, you can see here that we have kind of the bottom out of the Australian dollar. Now it's moving higher. You can see this very nicely on all three of these currencies, and these are the currencies that were traded by the robot. You can see here we have the American dollar starting to go down. Shorter term information is showing us that the American dollar is actually quite weak. And if we go back to this information here, you can see that the British pound is pretty strong, which supported the direction of this trade. You can see it's starting to pick up very nicely, and you see the American dollar is selling off nicely, which again supports a long British pound American dollar. Okay, so it's pretty awesome information, and you guys have access to all of this software besides the current the algo trader, because that's still it's just a utility that enables me to test the functionality of the strength of the software. But you have all of this information at your disposal, and you have the histogram here, and you can use this to tell you the exact same thing. So we can go here and say, well, okay, we want to see 18, that's the threshold. We want you to scan all of the currencies. We want you to tell us which ones are setting up. So you go like that, and none of them are setting up. So at the moment, what's there to do? There's nothing to do for this time frame. Okay, so you can go, okay, well, I want to see maybe 15. So what do we have? The currencies that are slightly weaker. We have none. So if we go to 10, I'm sure we'll see a couple. This will make a pop-up, come up here. As you can see, we have the most recent batch. We have the pound and the Australian dollar. Okay, and these are the ones that the robot traded earlier on. So currently we have minus 11 on the pound, so we can expect the pound to move higher, and we have minus 10, almost minus 11 on the Australian dollar, so we can expect that to continue to move higher for a little while. Okay, so really exciting stuff, and I just want to encourage you to use these tools. They're at your disposal, and use them. Okay, and the supply and demand software is an absolute gem when it lines up with this stuff, because you could look at something like this. The software, the supply and demand software, marked off this area of 4-hour demand. Price popped up. We reached this level. We saw extreme deviations in currency strength. Price went north, telling us that we have demand at this level here. Price came back to the level, and now it's moving higher. And then you keep holding the trade until the currency strength tells you that there's no longer a reason to buy the American dollar to buy the British pound and sell the American dollar. Okay, or you can look at opposing areas of supply, and you'll find that these overlap very, very nicely. Okay, good. So that was just a quick heads up. The software is there. Use it. And if you have any questions, post them in the Discord channel, or leave a comment below the video. If you like what you're watching, Please subscribe to the channel, hit the notifications button to make sure that you receive updates as I release them. Thanks very much for watching.